Welcome to Tax Time with Timalyn. I am your host, Timalyn Bowens, America's favorite EA. Tax Time is going to be your opportunity to send questions into me, tax relief questions, and I will answer questions every Friday morning at 10 a.m. Eastern. So you want to make sure if you haven't already, you've either subscribed to my YouTube page, which is Timalyn Bowens EA, or you follow me on Instagram or Facebook. So at Timlin S. Bowens. So the question for this week is, can a bankruptcy clear back taxes? And the answer is not really that straightforward. It depends. You see, usually when people come to me with tax problems, they have a whole lot of other financial problems. Sorry, I had to take a drink there. But an example of these are failed businesses, loans they've guaranteed, and judgments from lawsuits. Sometimes, and I say sometimes, bankruptcy is going to be the best way out. Think about it. There will be no reasonable contribution potential, there's no battle with the government, and there are no appeals. Sometimes it's actually cheaper and easier to simply wipe the whole slate clean with bankruptcy. The tax is gone, the other creditors are gone, and the judgment's gone. Everything gone, clean slate. So, while bankruptcy is not the best option for everyone, you should know how to use it if there are times when it is the right solution. So, under bankruptcy, there are six basic rules for discharging an income tax. First, there's the 3-year rule. Then we have the 2-year rule. Then we have the 240-day rule. If these three rules are met, after that, we have to make sure there's no fraud, there is no trust tax, and then there's no SFR. So, if you're not familiar with these rules, I'll break them down for you real quick. So, for the income tax to be dischargeable under bankruptcy, the 3-year rule says that the tax year in question must be at least 3 years old. So, for example, if the 2020 tax return was filed by October of 2021, in October of 2023, 3 years after the due date, that is when that tax return will have met the 3-year rule. So I'm sorry to break it to you. If you couldn't afford to pay your 2020 taxes, you can't put them in your bankruptcy if you're filing this year. That tax debt would have to be at least 3 years old. So if you have satisfied that rule, we'll go on to the next one, which is the 2-year rule. So the 2-year rule says that if you have filed a late return, it must be on file for at least 2 years. So remember, as I said before, I used the 2020 tax return. So let's say that you don't file your 2020 tax return until 2022. So you're really late with it, right? When 2023 comes around, your return is not going to satisfy the 2-year rule. Because remember, not only does it have to be 3 years old, it has to be on file for 2 years. So if we have the 3-year rule satisfied, and then we've also satisfied the 2-year rule, we'll move on to the next one, the 240-day-old rule. So sometimes the IRS makes an adjustment to your return. Maybe you go under an audit where they come out to your business, or they do a correspondence audit. Once that is done, if there was an additional assessment on the return, like they made some type of amendment or said, hey, you actually owe this. Any additional tax due from the adjustment must be 240 days old. Now, I know the rules. I don't know the reasoning behind the 240 days, but it's 240 days. So remember, number one, must be at least 3 years old. Number two, must have been on file for at least 2 years. Number three, any adjustments made must be at least 240 days old. So if you meet these three requirements, your income tax may be dischargeable in bankruptcy. So remember, number four, though, is no fraud. Now, I feel like this should be a given, but obviously it's not. So, number four, no fraud. You cannot have committed any civil or criminal fraud around your tax return. If there is a fraud penalty, you cannot discharge it. Okay. Number five, and number five only comes into play if you satisfied rules 1 through 4. So, number five, a trust tax cannot be discharged. So, no trust taxes. Examples of trust taxes are ones that you've collected on behalf of the government, such as payroll taxes. So, if you're an employer, you withhold your employees' taxes for them. Federal tax liens, state withholding, or sales tax, or even excise tax. If any of the tax that you're trying to discharge fits into one of those categories, it won't work. It cannot be discharged in your bankruptcy. So, if you stuck with me this far, I'm assuming that you have met those 5 rules. The final rule, no SFRs. So, if you don't know, an SFR stands for substitute for a return. If you have not followed the law by keeping up with tax compliance, the amounts owed will not be dischargeable under bankruptcy. So, what happens when you don't file your return? The IRS assesses the amount that you owe, what they figure that you would owe, based on any kind of income documentation that has been sent into them. So let's say, for example, your employer is filing W-2s. So the IRS already has an idea of how much you've made and how much tax you've withheld. Now, this actually works in your favor because when the IRS files an SFR, they don't take into account any deductions. So the amount that they figured is more times than not going to be higher than the amount that you actually owe. But it's still rule number 6. If there's an SFR on your account, the amounts owed will not be discharged under bankruptcy. So, dealing with the IRS collection division, it requires a lot of attention to detail. And I really hate that I'm seeing so many taxpayers not understanding which back taxes can be discharged in their bankruptcy. Every year, I have people come to me and say, I got to get these back taxes filed so I can give them to my attorney so they can put them on the bankruptcy. And then I have to explain to them the 3-year rule, the 2-year rule, and the 240-day rule. And that's when they realize these taxes never were going to qualify for that bankruptcy in the first place. So if you find yourself in that situation right now and you're trying to hurry up and get the current year taxes filed so that you can give those to your attorney, I want you to keep in mind those taxes aren't going to be able to be discharged. However, if you want to work with a tax relief firm to set up some type of arrangement with the IRS, that is what I would urge you to do. Because ignoring IRS notices is not going to make the IRS debt go away. So, my firm, Bowen's Tax Solutions, we actually specialize